Hello, friends. I was just going through some of the macroeconomic data released during the month of June 2025, and I got some very interesting insights which I thought of sharing with you. India's fiscal deficit has come down from 5.6 to 4.8% of GDP, which is very good, so that we are having the fiscal prudence. Our current account deficit from 26 billion last year has come down to 23.3 billion this year, and which will be very close to 1% of the GDP, which is also once again a very good number. And our currency has strengthened. It was not so volatile like any other emerging economy. Our currency is relatively stable in spite of the turbulence experienced during the tariff wars and geopolitical tensions. The depreciation also, even on a yearly basis, if you look at it, it's around 3% only. And our GST collections, as you know, has been hitting very consistently 1.85 lakh crore and hovering between 1.85 lakh crore to 2 lakh crore, which is very, very good. And one important data is that during March 2025, our domestic investors have participated in equity markets more than the foreign institutional investors, which is a very big change. And thanks to the 27,000 crore SIP book size, which is hitting on a monthly basis, plus all the money coming into the mutual funds, equity markets, IPOs, and other stuff, which means that our retail ownership in equity markets has gone up substantially than in the previous years, thanks to the equity culture which is happening across India, which is a very healthy sign. And our foreign reserves are also increasing, which is also a very good sign to provide the relative stability. And we are also having a very stable crude oil, because since we import oil from the other economies, our bill is also not shooting up because the price of oil remains anywhere between 60 to $70 consistently in the international crude oil market. Fine. And with all these things, what I would like to tell is that investors should not worry about the slight premium valuation which they are experiencing, especially in the broader market universe, because fundamentally our things are very good, and we will not be available at a discount like what it was earlier. We will be available slightly to a premium only, because our economy has been doing really good, and we are also progressing in a much bigger way, and we will eventually become third largest economy in the next 2 to 3 years also. So with all the good factors, and with the interest rates also come down, with RBI reducing the repo rate by 50%, which will also increase the credit growth in the times to come, because the retail credit participation has also gone up to double digit now. It's more than 11%, which is very good for the economy. So as an investor, whenever you are thinking about equity markets, just plan your investments and don't worry about the valuations alone. As I keep reiterating that our domestic businesses are doing really well. Our consumption has picked up. We have many industries, many companies have come into the formal side of the economy, and they are contributing big, and the size of the economy is also going up. So this is a reiterating message for my investors to plan their investments based on goals, as well as to stay invested and not to worry about the short-term volatility, as well as the premium valuation when compared to similar emerging market economies. So this video is just to reassure the investors to plan their investments and stay invested, and not to perturbed by any external noises, which could be due to the Donald Trump's external policies, or any geopolitical tensions, or any other short-term movement which will deter the investors' journey. Just stay invested, stay calm, make any slight changes here and there depending on the asset allocation and your time to go. Thank you very much.